Okay, guys, so in this video, we're going to talk about Apple stock and their impressive recent earnings release for the third quarter 2020, and of course, the well-discussed 4-to-1 stock split, guys. So before I get into this video, please give me a thumbs up because it really helps the channel. So let's get into it, guys. I actually mentioned Apple stock back when it was around $285. I posted that video, I believe it was around 3 months ago, and I basically talked about why I thought Apple was such a strong buy, the fact that they're coming up with so many new products, the fact that the company consistently returns value to shareholders by doing share buybacks, which are basically buying back its own shares using cash, and the fact that the company had so many products in the pipeline, like things like AirPods and even products to help you find your keys and stuff like that. So congrats to you guys that bought Apple stock when I recommended it under $300. Now the stock is absolutely taken off due to the recent earnings release. And one of the reasons why Apple earnings has been so high is one of the key catalysts has been the iPhone SE. So Apple finally got smart and offered a budget iPhone under $400 that will kind of compete with that whole Android market and just give their whole services business a boost. But it wasn't really the service business that did really well in the recent earnings report. It was kind of their computers, their iPads, their MacBooks, and of course their iPhones and things like that. So the products did really well and services business did well as well. So let's really dig right into that earnings release. Okay, so here we are in the recent Apple earnings release. And the reason why I always mention earning releases on this channel is because I want you guys to really get into the habit of reading exactly why these companies are going up. Yes, it's obviously great to just basically take a look at stock prices and you can buy on strength and things like that if a company you think it's going to go higher, but actually understanding why the company itself is going up will really help you uncover these ideas in the future for yourself. And that's when you're really going to see amazing investing results, when you're able to buy companies and then hold them for around 3 to 6 to 12 months. Obviously, stocks will go up quickly, for instance, what happened with Kodak, but the problem with that is that usually when it goes up really fast, it can go down as fast as well. So reading these quarterly reports will help your investing a lot and help lift your overall annual return, because that's how you want to really be tracking your returns. You want to be tracking them annually. So as you can see here, revenue was up 11% and earnings per share up 18%, and they put up a new June quarter record. So obviously, guys, I'm not going to spend too much time reading this. You can check all of this information out on apple.com. But basically, the company revenue was almost 60 billion. But let's get right into really what everybody wants to talk about. It is pretty much the new stock split. So we know that Apple is obviously crushing it. We know they're making a ton of money, and they had good earnings across all of their business segments. Most of them had lifted pretty strongly. So we can actually take a basically closer look at that as well. But I want to talk, and then I'll talk a little bit more about the stock split. Okay, so I got these numbers off of seeking alpha.com. I hope you guys can see this. Let me try to blow it up a bit. Okay, so as you can see here, I got these data from seekingalpha.com, a site I like to read quite a bit. So here's kind of an individual breakdown of the actual product beats. So as you can see here, iPhone revenue was up over 20% expected. iPad revenue was up 37% over expected. MacBook sales up 7 up 18% over expected, and even the wearables unit. So you got your things like Apple Watch and things like that, your AirPods, that was up over 8%, and services revenue actually was slightly up, guys. So this wasn't just where Apple's service revenue had kind of done so well and everything else kind of declined. It was just a lift overall across the board in their best quarter ever. So this is one of the reasons why I think Apple is obviously the most valued company in the world. They are no longer just an iPhone company. They are really diversified, and they're still innovating. I think the most recent kind of innovation I've seen a lot of people lately wearing AirPods, and that is definitely kind of seeing the same trend that I saw when I was in high school, when I saw everyone with the iPhone. So I'm thinking, even myself, I don't have a pair of wireless headphones, and I'm seeing that is kind of one of the newer trends going out here. So Apple is on top of their game. Don't really listen to the haters that say they aren't innovating. Just isn't true, guys. So now let's talk a little bit more about that stock split. Okay, so now the infamous stock split that everyone is talking about. So the stock split is basically they are going to award 4 shares for every 1 share that investors own on record as of August 24th, guys. So, for example, if you own 1 share of Apple after uh, August 24th, on August 31st, you will receive 4 shares of Apple. If you own 10 shares of Apple right now, you are going to have 40 shares. So, what this really does is it doesn't really affect the company at all, and it doesn't increase the market cap, and it doesn't increase your percentage of the company. What it does is it's basically a trade for you have $1, and then they're going to give you 4 quarters. So that's kind of a way to visualize it. And the reason they're doing this is a lot of times companies do things like this to make the shares more affordable to investors, to just make the price a little bit cheaper so people can buy into the company. Okay, so now let's talk a little bit about Apple's stock split history. So as you can see here, Apple has had previous splits, so this will be the 5th stock split that they've had in the company's history. So the first one was a 2-for-1 split back on June 16th, 1987. The second one was a 2-for-1 on June 21st, 2000. Then they did another 2-for-1 split on February 28th, 2005. And then most recently, a 7-for-1 split back in 2014. So Apple uses this way to kind of keep the share price down to make it more affordable. And even though we have fractional shares now, a lot of investors do judge stocks based on their stock prices. And the fact that Apple is the most valuable company in the entire world, obviously they are doing things right, and they are doing as much as possible to keep returning value to shareholders. And basically they're doing that by making it more affordable so people can buy in. So what I want to do is I want to show you guys exactly how many shares of Apple you would have had if you would purchase just 1 share before the split back in 1987. Okay, so here's an article on 9 to 5 Mac, and it says one original share is now 224 new ones, guys. So this is the power of stock splits. And it says that means if you had owned 1 share prior to the first split in 1987, you now own 224 shares of Apple. So, Apple is definitely a company. They're really, really smart, and they've been leading the tech industry. They've been the kings of tech for a very, very long time. But the funny thing is that so Apple has been the kings of tech for a long time. But the funny thing is I think the stock can run a lot further, and I'm going to explain to you guys exactly why. But to do this, we're going to have to take a look at some key numbers like shares outstanding and things like that. Okay, so I'm on Yahoo Finance now, and I want to show you guys some of the numbers that are the reason why I think Apple stock can run a lot further. So obviously, Apple has impeccable margins, as you can see here, excellent return on equity, and strong revenue across the board. We're not debating that in this video. What we're going to talk about is whether Apple stock can keep going higher, or it's simply just gotten out of control. So the first thing I want to mention is, as we can take a look here, the stock is currently trading at its 52-week high, but after this stock split, the price is going to be cut in fourth. So for instance, it's really hard to figure out where Apple stock is going to be when the split happens, but looking at kind of the trajectory, it looks like Apple stock is going to hit the $2 trillion mark before that happens. Currently, the market cap of the company is around, this isn't updated basically, but I believe the current market cap is around 1.8 trillion, something like that. So let's say that Apple stock goes to past 2 trillion or something like that. Now, what we're looking at here is we're looking at the shares outstanding. So the shares outstanding is going to increase because they're doing a stock split. So now there will be 16 billion shares outstanding. So now with more shares outstanding, it just gives people a chance to buy the stock at a lower price, but it doesn't really change the percentage of the company you own. So let's say that after the stock split, let's say Apple stock is around like $400 and maybe $50. To make it a much easier example, to make it easier, let's say the stock is like $440. So that way that after the split, each share would be worth like $110. Well, obviously right there, that's going to look a lot more attractive to investors because if you guys didn't know, people really do judge stocks based on their stock price. A lot of people look at $400 for Apple stock and they just think it's too expensive, and they don't really take into account that yes, the share price has gone up, but when you're buying a share, you're getting a bigger percentage of a company. Whereas if the share's price is much cheaper, usually you're going to have a much smaller percent. So the reason this happens, guys, is because people just take a look at the stock price and they don't really take a look at the shares outstanding. So when you take a look at the shares outstanding, there's only 4 billion. If you own one share of Apple, you own one out of 4.33 billion shares. So the fact that the stock price after the split may be like around $100, $110, something like that, and people think it's cheaper, but it's actually the same because the shares outstanding will be over 16 billion shares outstanding. So that is kind of one of the little marketing tricks in the stock to just make it look more cheaper, because they understand human psychology and how if people see a cheaper price, they want to buy it. So this is just a brilliant maneuver that Apple's been doing for years, and it's working like gangbusters for them. They continually cut the price around $100, and then once it runs up, they continually do this over and over again, and it can make you a lot of money. So it won't obviously give you a larger percentage of Apple stock, but it will give you more shares. And having more shares means that you're able to collect dividends and things like that. Apple is a very strong dividend paying stock. So as you can see here, the current dividend for Apple is around $3.28. So after this split, you will be receiving this number divided by 4. So let me give it. Okay, so according to my math, after the split, the dividend should be around 82 cents per share. So the dividend yield itself won't change, but the dividend will. So obviously it's going to be 82 cents because we're just taking the annual dividend rate and just dividing it by 4, guys. So, obviously good things all across the board for Apple shareholders. I personally own Apple stock in my SEP IRA, and I actually had more shares of Apple, but I recently sold some of them during the run up to kind of go debt free, which is something else I want to kind of talk about in this channel in the future. I think the power of just the feeling and just the peace of mind of being debt free is probably the first time I've been debt free since I was in high school or something like that. So, but I did sell some of my shares to pay off some of my debt and go debt free. But I still own this stock in my IRA, and this is a stock that I never plan to sell. I'm going to keep this stock for life, and pass it down to the next generation, because I just think Apple is so good, and Steve Jobs just built a really great company, and we're seeing kind of the fruits of his labor continue to bear dividends and just share appreciation and just overall value to humanity for years to come, guys. So I hope you enjoyed this video. So now, things to wrap things up, I want to talk a little bit about where I think Apple stock will be headed kind of after the split. So let's take a look at that. Okay, so here we are on the chart right now. So first of all, I want to give you guys is that obviously after the stock split, let's say that the price is around $100. My personal price target is I think this is going to attract a lot of new investors that are very price conscious, even though we're in the era of fractional shares. So I think Apple stock can definitely be headed towards about a conservatively, for we still have around, I would say, 4 months left in the year. So I think a conservative price target would be like $150 post split, which would be around $600 currently now. Now I know that sounds a little bit outrageous, and you're thinking, how can the market cap go so high? But remember now that Apple is basically breaking records during the whole pandemic, and I expect the pandemic to soften a ton after the presidential election. So I don't really talk about politics on this channel, but I do think it is definitely a key event, and I think is an inflection point in the whole pandemic. I think after the elections, assuming that they won't be postponed, I think that we're going to see a big softening in things like cases and stuff like that, because one of the things I do know about pandemics is as fast as they come, as fast as they go. So the speed of the pandemic, that how it came, hopefully it will stop, and cases will slow down just as fast. So basically, you want to be buying Apple stock. It's definitely a stock you want to have in your portfolio. You really can't go wrong with it, whether you buy Apple products personally or not. I I see Apple fanboys all the time, and their passion for Apple makes this a stock that I'm going to hold in my IRA and hold this for the next 10, 20, 30 years. I don't really plan to sell it, although I did sell some shares to go debt free. But after being debt free now, I plan to hold that stock well into the future. So I hope you guys enjoyed this video on Apple stock. Just great things across the board. You guys have any more questions about the stock split? Just leave them in the comment section below. Do my best to answer them, guys. So that's it until next time. Take care.